So income funds are in focus. They're a kind of a debt fund, but what exactly are they? You've just taken a look at how income funds are in focus right now, and that might be a safe option, but whether or not they actually work, to discuss that right now, I have with me Kumar Nathani. He's an income fund manager. He's been that for the last 6 years. Kumar, welcome to the show.
Thank you.
Of course, Kumar is with Taurus Mutual Fund right now, and you've been with UTVI in the past as well.
Yes.
Now, you must tell us that income funds, imagine that we don't understand the concept at all. If you have to explain what an income fund is, what will you tell us?
I would say that income funds are basically funds where you are investing in government securities, corporate bonds. That is, the corporate bonds are nothing but which are being issued by the corporate or the companies.
Right.
These are the two areas where basically the investments of income funds are happening.
Right. But how safe are they? Because we're looking at very turbulent times. I mean, things are crazy right now.
Yeah.
If you have to invest in these times, want a certain decent kind of return in these markets, are income funds the place to be?
See, if you see as far as the returns are concerned, they have given tremendous returns.
Right.
In the last 6 months, the returns have been something around 30% also as far as the investments in gilts or the government securities are concerned. As far as the companies, they have given a return of 20%. It is not that the companies are paying 20%. It is basically the appreciation, the principal appreciation which has happened has given a good return as far as the income funds are concerned.
Right.
And in future also the expectation is that the interest rates are going to go further down. So why not invest in funds or income funds just now?
Okay.
Because if you're expecting the interest rates to come down further, it is better to lock in your funds at this time rather than wait for the future when the interest rates come down. Actually.
That's right. But now, when you talk about income funds, I'm understanding it as like a fixed income that's coming into me at the end of every year or every month.
Yeah.
Yeah. Now, keeping that in mind, now we have fixed deposits as well.
Yeah.
They have certain returns as well. What's the essential difference between the two? I believe there is a difference in the risk factor.
Yeah, there is a risk factor involved in in income funds. As far as banks deposits are concerned, basically you are putting money for a fixed period of time, maybe 1 year or 3 year period.
Right.
And if you come out with the fixed deposits, the exit load is also there. The penal interest is basically higher. As far as the income funds are concerned, the exit load is there if you want to come out with the funds, but the load is not heavy to the extent as in the fixed deposits are there.
Right. So if you're looking at investing right now in income funds, what's a good period of time to be staying invested in it?
See, if you see income funds as such, you should have at least minimum horizon of 1 year or more than that.
Okay.
And as far as otherwise, there are options for short-term investments also where you can invest for a shorter period of time, where are the other liquid and a liquid plus which are absolutely lower maturity funds and the returns are lower also.
Okay.
So these are the basically options that the investor has where you can invest money in income funds.
Right. Now, income funds, of course, there are various kinds of them. There's the corporate fund and there's the gilt funds as well. Tell us, what are corporate funds?
Corporate funds are basically nothing but the bond fund. They call the bond fund because you are investing not only in gilts, but you're investing in corporate papers also, which are issued by the companies.
That's right. And gilt funds, essentially, government securities.
Right. They come out with various issues at various points of time, and they come out and borrow money.
Now tell us, Kumar, what are the 3 top reasons, according to you, why I would want to put in money in income funds at this point in time?
See, the expectation is that the interest rates are going to go further down.
Right.
The economy is going to slow down. The equities are not in a better shape just now because of various happening around, and the returns, if you have to invest, it is better to have investment where you at least have some interest coming back to you. And the fixed income, because the interest rates coming down, they give you opportunities to invest and move out when the interest rates start moving, then you can make a capital gain also on.
Right. So it is timeliness that has a lot to do with the fact that income funds have become so attractive at this point in time. We are seeing interest rates dip, and that is why we are seeing money being pulled out of fixed maturity plans as well and going towards income funds.
Actually, SEBI has come out with a regulation as far as the investment in FMPs are concerned, or the fixed maturities is concerned, that you cannot withdraw the money from the mutual fund. You'll have to withdraw if the scheme is only listed on the stock exchanges.
Correct.
So as far as that is concerned, the liquidity to some extent on FMPs will reduce because you don't have an exit option for the investor.
Right. And in comparison,
the income funds have exit option where you can pay some rate of penal interest or exit load and come out with it.
And is there a certain profile of an investor who is more tuned to putting in money in income funds, you think?
Basically, people who don't want to take a risk on the equity side, number one.
Right.
And people who are aged, who want some coupons coming in as far as returns are concerned. They are good for, the income funds are basically good for them.
Right.
But that doesn't mean that a new investor or a new entrant to the financial industry or basically putting money, I don't think they should also try to invest something at least.
So if you have more questions on income funds, you're wondering what to do with those investments when you want to keep it safe and you want a certain decent return as well, all you have to do is tell us about it. We'll pipe those questions across to Kumar over here. Our email ID remains the same. It's smartmoney@utvi.com, or you can SMS us at 59995. Just SMS SMART, put your name, your city, and your question, and send it across to us on that number on your screen. Right now, we're going to thank Kumar for joining us and shedding this light on income funds, something that we didn't know anything about when we started off. But we have a slight idea, and for more questions, send them across to us. Right now, a small break, and we'll return to talk about retiring rich. Stay tuned.